Hey, what's going on, everybody? This is Hayden Crabtree coming to you live. I want to talk to you today about the underwriting tool and software I use to underwrite deals personally and the power behind what a good underwriting tool can do for you in your real estate investing business. This is called the Cashflow Analyzer. I love this tool so much. I would say I use it almost every single day. Today, I'm going to walk through and I'm going to show you why I think this is so powerful. I'm going to walk through. I've got an example deal here that I've been working on. I'm going to walk through and show you guys situational analysis and how I use this tool to make sure I know I'm getting a good deal and what my projected incomes are going to be whenever I'm working through a real estate acquisition. So I just want to break down this sheet for you real quick. We've got some tabs here up at the front. We're on the input data screen right now where we're going to talk about how much we're paying for our property, our improvements, and we're also going to talk about our cap rates, our financing sections, everything of that nature to get our mortgage payment. And what the capital stack is going to look like on this. So the first place I always like to start is the purchase price. On this property, I'm looking at buying it for $1.5 million, and I have some improvements that I think are going to cost me $95,000 into that. Okay, I'm going to lever this property. I'm going to use a bank's money at 80% LTV. I'm going to put 20% down. I got quoted a 4.85% interest rate for a 20-year term. And this sheet is going to automatically calculate what my mortgage payment is going to be. Okay, now the next thing I'm going to do from here is I'm going to go over to my rent roll and insert some information. Okay, so what I'm going to do here is this is looking to be a triple net lease property. We can talk more about that later, but essentially I have one income line item, and that's looking to be $26,000 a month. Okay. And then one thing that I love about this is my revenue increase. So if I'm predicting for inflation to happen, which I always am, I want my revenue to increase by 2% at least a year. Now, if I'm set into a lease, maybe I can't do 2% a year. So let's just say that this were normal rents on a property, and or you know what, we could say it's a triple net lease, and I'll just say that we negotiated 2% annual increase in rents. So in year one, we're going to have $26,000. It's going to a month in income from this property, and that's going to go up by 2%. So if you look up here in year two, our income is going to be $312,000 in year one, $318,000 in year two, $324,000 on and on and on. And you can see how over time this small 2% increase leads to us making significantly more income throughout the years. Okay? We could insert, if we negotiated 3%, the power of this tool is that instantly we can click one button, and you'll see how this circulates through the whole spreadsheet later on. But you'll see how to click a one button, it's going to change our entire spreadsheet. Let's keep going on. We'll circle back to here in just a second. Okay, so our expenses. Now we're going to come through and we're going to list all of our expenses out. Accounting fees, advertising, travel, insurance, maintenance and repairs, on-site management, supplies, property taxes, utilities, water, software, credit card processing. So essentially we're just going to come to this tab and we're going to enter in all of our expenses. And then the same we did with our income, we want to see what is our expenses going to rise by, because not only does our income rise because of inflation, but our expenses, we're going to have to pay more because of inflation. So I always like to say 2% if I had a reason to believe otherwise. I would change this to be appropriate. So I could come all the way down to 2.5%, all the way up to 6%, and this is essentially inflation. On the income side, we get to measure a little bit more, because if we know we're going to be raising our rents, like say apartments in Orlando, they've been going up at 6% a year for the last couple of years. So if I knew that and I wanted to project that, I could hit it 6%, but that's aggressive, so let's not do that. So we enter in our income, we enter in our expenses. We come here to this tab, which is amazing, Cashflow Analyzer. So what this does is it's going to bring in all of our different information throughout the first three tabs, and it's going to put it in. So it's got our income at $312,000, our expenses at $106,000, and then it gives us our NOI. From our NOI, and you guys are learning about this in Skip the Flip. If you don't have Skip the Flip, go get it, haydencrabtree.com/skip the flip. I'll give you guys a free book. We talk all about this process. This is your income statement. This is your balance sheet. So based off of, back here on the input data, we put our cap rate in right here. Based off of this cap rate that we input, we're going to get a property value. Okay, so as you can see in each year, If we take this NOI divided by 7%, it's going to give us our property value. And then from here we have our NOI minus our debt service gives us our cash flow. And this is how much money we're going to be making a year, or how much we're projected to make a year. Okay, and as you can see over time, it gives us our mortgage balance. It's going to automatically calculate for us how this goes down over time. This is the amortization schedule you learned about in Skip to Flip. So this is pretty cool because it factors in our inflation here on the rent growth, factors in our inflation here on the expenses, adjust that to our NOI, and automatically calculates our value, less whatever our mortgage is, and gives us how much we would get if we were going to sell the property. Okay, so this is a very powerful tool. The next coolest thing that I like about this is we can come here to Executive, and once we come to Executive, it's going to give us our return measures that we talk about in Skip to Flip. It gives us our cash on cash, our internal rate of return, and the cool thing about this is we can compare how it happens over the course of the years. Okay, so if we want to check out what it is not only in, say, year 4, but let's check out what it is in year 15 if we wanted to. Okay, so it's going to give us this chart and all of our different returns. Now, some of these returns and numbers and metrics you can use to help you bank the property and talk to financiers, talk to lenders. So this is a very powerful tool. But the most, just by far, the absolute most favorite part for this spreadsheet of mine is the fact of how easy it is to compare situational analysis. Okay, so let's come back here and look at year 3, and let's look at year 5. Okay, so what I like to do is, let's say that in year, let's use year 5 as a basis. So our cash on cash is 35% and our internal rate of return is 59% as is. However, let's say what would happen if our revenues did not increase at all. We can just hit 0%. And what I love about this is it's automatically going to change all this. It's automatically going to change our cash flow analyzer. It's going to change our value. It's going to do everything for us. And I can simply come back, hit Executive to see the returns, and I can immediately see what my cash on cash and what my internal rate of return adjusts to. And the cool thing about this is that if these returns are acceptable to me, and I can do a situational analysis to say what is the worst case outcome, then I can model this out very easily and very quickly to say, is this a deal that I want to do or not do? Okay, so another cool thing is you actually noticed here how these numbers are going down, right? So one thing that you'll notice is this sheet will actually tell you, if you were to do a property, what would be the best time to sell. Because if you see here, it's got year 1, doesn't have an internal rate of return because it can't compute because the time is so short. But at year 3, you're going to make a 79% internal rate of return, and at year 5, you're going to have a 50%. So this will very easily tell you, hey, you'd be a lot better off selling this property at year 3 than you would be holding on to it at year 5. So it helps you out in that way. Another way that I really, really love this sheet is, let's say I want a goal seek. So let's say that I want to figure out what I should offer for this property, and I want to achieve, let's say I want to achieve, let's just be ridiculous here. Let's say I want to achieve a 90% rate of return, which these numbers are ridiculous anyways. You know, if we're achieving a 15 to 20% rate of return, we're doing great. 30% is amazing, almost unheard of. So, you know, the stock market, for instance, does 8% compounded a year. But anyways, let's say that we want to achieve a 90% rate of return by year 5. I can just hit, with all this information in, I can just hit seek answer, and it'll tell me exactly how much I should offer for this property. So it's really, really powerful, because if you're trying to negotiate on a deal, you can put in all your information, and then you can set your criteria. And let's say if I only wanted a 30% rate of return, obviously that's going to allow me to pay more for the property, and it's going to drive my return down. So this is for a 90% return. If I just want a 30% return by year 5, let's say I want to seek answer, I can pay $2 million for this property. Okay, if you were to try and do this all by hand, it would take you hours and hours to do this. Okay, let's say I want it by year 3. I can hit seek answer. It's going to give me a different number, down to the dollar. So this is very, very powerful for when you're looking at a property, wanting to purchase it, and figuring out how much can you actually pay on the top end for that property. Okay, look, I hope this helped out. If you guys have any questions whatsoever, hit me up, drop a comment below. If you like this video, please do me a favor, hit subscribe on this. I would really appreciate it. If you want to come join my Facebook community where we talk about real estate investing each and every day, come join. It's haydencrabtree.com/community. And if you want to get a free copy of my book I referenced, Skip the Flip, go pick it up for free at my website, haydencrabtree.com/free book. I appreciate it. Y'all have an awesome day.